The other thing that a blockchain is an asset-agnostic ledger. Every time you transact in a different product, whether it's a dollar, a government bond, an equity, or other security, you're dealing with a different infrastructure. The banks and brokers, for want of a blockchain expression, are like the layer twos that talk to all the infrastructures. But a blockchain can hold every asset.
Welcome to The Edge of Show, your gateway to the Web3 revolution. We explore the cutting edge of blockchain, cryptocurrency, NFTs, ordinals, DeFi, gaming, and entertainment, plus how AI is reshaping our digital future. Join us as we bring you visionaries and disruptors pushing boundaries in this digital renaissance. This show is for the dreamers, disruptors, and doers that are pumped about where innovation meets culture. This is where the future begins.
We're expanding across new frontiers, streaming on Zora and Rumble. On Zora, creativity lives on-chain where every post, drop, and idea can evolve into something of real value. Explore what we're building on Zora at zora.co. And on Rumble, you'll find the space where creators connect freely and conversations grow without limits. Catch our episodes and join the discussion on Rumble at rumble.com. Just hit either platform and search The Edge of Show to find us. Two communities, one mission building the future together.
Yeah, I'm excited to dive in here. We've been talking a lot about this year, especially on the podcast, about just how traditional financial institutions are really grabbing crypto and DeFi by the horns. And I've got three guests here who, are in this every day and can provide great perspective on really what's happening, inside the walls of institutions and how they're really thinking about it. So my first question to all of you is everybody's sort of talking about how blockchain is going to change the world, right? And it's this killer app. And I think we're starting to see that now. But with institutions, like JP Morgan, at companies like Thornton, and you're building your own blockchain over there, which I think is great. And we're going to talk about that too. So, with FinTech companies as well. What is exactly going on? I'd like to kind of dive into, what's the proof that we're actually seeing changes? Maybe in you can speak to the last year that we're seeing these applications not just be talked about, but actually put into practice. Maybe we'll start with Marcus.
Thank you. So I'd like to maybe address it from a perspective what I see in my daily life as the most prominent use case. And over the last year, I've seen a significant increase in stablecoin adoption. We both just came from a big conference where it was all about stablecoin. We've worked with stablecoin issues for a long, long time. And it seems like this year it's the new arms race, right? You have like a Walmart and FIS, like tech companies, commercial companies starting to consider or launching a stablecoin, which is going to be a big competition to bank deposits, right? It's the banks. We also talk to a lot of banks, and not just the large ones, but also community banks who are now fearing that companies that are issuing stablecoin could take deposits away from them.
Yep, that's a big one. Big argument on Capitol Hill with that one too, but we won't get into that right now. Kee, go ahead.
Yeah. So my journey, actually, I've been in like digital currency, blockchain space for the last 10 years. And I can tell you why I think now is real. So my first 6 years, I was doing experiments at the central bank. So I was at Monetary Authority of Singapore doing CBDC experiments. So that was very much experiments. We had a lot of conversations with banks in the industry. And generally, when you talk to them, their blockchain team is like 2 to 3 people doing blockchain experimentation. Now, when I joined Connexus, that was about 3-4 years ago. Connexus, so this is a blockchain arm within JP Morgan. We have a couple of hundreds of people across product and technology. So if you are talking about real adoption, that's the size of the teams that you need to make things real. So if you're talking to, companies with like 2 or 3 people looking at blockchain, it's a lot around like making announcement, talking about innovation and experimentation. But if you're talking about building actual product, having real adoption, that's growing teams to at least, 30, 50 people on a smaller case. But at larger banks like us, that means having teams that are in the hundreds, actually building product, looking at compliance, developing the technology. And I think that's what's making it real. So it's not just about JP Morgan, but if you look at the industry, we're seeing a lot of acquisitions, acqui-hires, where essentially, like large company buying over a blockchain company, essentially building up their team size by 100, 200 people at a time. So I think this is what is making it real today.
And I would argue your CEO going on stage today and saying crypto is real, Jamie Dimon, who's been a big crypto skeptic for the last couple of years, it's probably a top signal as well. Paul, go ahead.
Okay, hello everybody. I'm just as well as L4S Core, which is our startup and our platform called Tapestry X. I am an active member in the GBA and working group of the banking and finance and a board member. I am known as a contrarian sometimes, so I'm going to say yes, it is real, but not quite. All right. And the reason I say that is because blockchain is the technology of the future that forgot the future. And what I mean is that you can record a transaction today and you can look at the history. But anything that's in the future is in the smart contract. Therefore, it's not on-chain. Therefore, it's not reconcilable. Therefore, it's not projectable. And that's the key. When you're dealing with an income statement and balance sheet, and I challenge you all to look at those in your businesses, how much of it is payables and receivables? And the current blockchains don't record payables and receivables. So while they've got interesting experiments going on and a lot of investigation, they're yet to be able to do a true full balance sheet on a ledger with proper accounting. So there's no double entry accounting. It's just a state change log. So at the moment, they're proving the technology, but they're not quite there and they struggle with scale. You hear scale, capacity, and interoperability, but they're also suffering from a lack of accounting. There's an interesting juxtaposition to that because I'm a big fan of the crypto DeFi world for innovation, but that's the reality.
And we're going to get into that because you are building a product that solves around that. We will come back to that. But Marcus, for you, you're working at Grant Thornton. You're you're looking at blockchain as this new innovation, maybe not so new, but this innovation that could help with, transparency as you audit, right? Blockchain is cool because you can look at the ledger and it's all there in front of you. So in theory, that should make, an auditor's job easier, right? Is that the case? Or does that kind of provide a new set of challenges when you're looking at, auditors and auditing?
Thank you. My answer would be, well, it's interesting. When we first got into the crypto audit space in 2014, our leaders were saying, it's pretty easy to audit like a crypto native company. Every transaction is recorded on the blockchain. And we were talking about auditing a crypto exchange. And the answer was like, well, not exactly. Maybe 5% of transactions on a daily basis hit the blockchain, right? Because if you're like a crypto exchange, you're like a decentralized company, right? All the customers are on the platform, which is an in-house system. So trades would be, you have users trade with each other and the trades get settled. It only happens on the platform, right? It doesn't necessarily hit the blockchain because like if A buys 100 Bitcoin from B, and the Bitcoin already held by the exchange, nothing is moving on the blockchain. That's why like the on-off chain reconciliations are important. I mean, we built infrastructure back in 2014 that we maintain our own fully synchronized nodes that we query for existence and ownership testing. We can also use it for forensic investigations. And then the audit challenge is really existence, ownership, and valuation. Valuation has become a lot easier. You have like now pricing providers. Of course, there's vast trading data, right? Nobody's questioning anymore if the price of Bitcoin is real. In the past, there have been discussions: is it a made-up price? Is it a real price? I think it has been proven that it is a real price, and the market is always right, as we say. But it's really the off-chain, right? Connecting the on-off-chain transaction that makes it more complex. Purely testing blockchain transaction would be easier, but in the real world, and I give exchange as an example, you still have the old school tracing and ticking and tying.
So how do you adapt then as more, I guess, as the world of finance moves on chain?
Yeah, I mean, if a better example might be in this instance, when you look at like stablecoin issuers, right? And I'm giving real life examples with companies and products that we're actually working, right? So we also work with like stablecoin issuers where we do monthly reserve attestation, which is now a requirement under the Genius Act. So far, most companies have been doing it on a voluntary basis, unless you have a bid license or you have your coin approved by the New York DFS that required already a month end and a random during the month date attestation by a third-party accounting firm. So in that instance, right, we get the data directly from the blockchain, right? We kind of like roll the balances and say, here's the number of coins that are outstanding, and then we do the back-end testing of the reserves, which has nothing with the blockchain, right? It's like how much cash in the bank account, how many securities are held with a custodian. But that's like an example where we say we get the data directly from the blockchain without saying, hey, client, can you give us your record? And we audit the record, right? So that's one example where we say the information is on chain. We rely on the information on the chain.
Kee, you've been at Connexus for a couple of years. Connexus has actually been around for a lot longer than I think a lot of people actually realize. I believe it launched in 2019. But you guys have been working on things like tokenized cash and payment innovation. How does JP Morgan view sort of the future of these products? Do you think, and from your view especially, do you see this as really sort of the future of finance, as everybody else seems to think, or a lot of people seem to think? Is it going to be as revolutionary as something like online banking or credit cards? I mean, is it really is it the future of finance?
I would say definitely yes. So maybe let me just take a step back. So today we run a blockchain-based payments network. We allow our clients to do real-time 24/7 kind of transfers. We are transacting about $3 billion in value every day. So it is a live network, and this is something that clients are already using. Now, when we talk about whether it's the future, this is actually changing how some of our clients are thinking about how they do their business today. So one good example, if you think about treasury management, the usual concept that we always talk about is this idea of follow the sun. So you have funds, at the end of day at each location, you move it to the next location. So the next location in their next operating day or when the start of the day, they have the funds available to do transfers. But you think about it, if you actually have 24/7 real-time availability to funds anywhere in the world, do you actually still need this follow the sun model? Because if, I need funds now, I don't have sufficient funds over here, I just pull it from my other location, regardless of what time it is on the other side of the world. Because, for example, if it's Singapore in the day, on the New York side, it's probably at night. Usually, if you think about the bank accounts, they are not operating. But once you have 24/7 real-time availability of funds, if I need money, I'm just going to draw it down. I can then use it in Singapore itself. So it's actually changing the way that people are thinking about treasury management. Now, the other perspective is really from programmability. Again, it's actually enabling a much tighter integration between banking and business. So we tend to always think about, there's a separate set of business processes. At the end of the business process, you make a payment process. So for example, best example is you think about like, okay, I'm going to purchase something. So you run all your invoices and everything, and then you get this invoice from your supplier that says, okay, you are going to pay me, and then you actually make the payment. Now, from a programmability perspective, we can actually start pulling these two processes together. So one of our clients is actually looking at this use case around there's a buyer, there's a seller, there's going to be certain kind of transaction getting recorded between them on a blockchain. Now, there's a smart contract that's always running in the background in a sense that says, hey, there has been an agreement reached between these two parties, and because of that, I can now make a payment. So from that perspective, we are enabling a much tighter integration between banking processes and business processes, and that's actually helping, well, from a client perspective, making transactions a lot more efficient. And of course, from a bank perspective, we are very happy to be embedded very fully into our clients' processes as well.
Are there any other products that JP Morgan and Connexus are exploring specifically? Are you thinking about tokenized deposits at all?
Yeah. So what we have today, well, a lot of people use the term tokenized deposit. What we call blockchain deposit accounts was essentially what I was mentioning earlier. We are also looking at the issuance of deposit tokens on a public blockchain. But the biggest set of use cases we are looking at currently is really from an atomic settlement perspective. The idea that, when you have a digital asset and a digital currency on the common platform, you allow for that atomic settlement. So from a DVP perspective, you can allow much safer settlement of securities against payment. But from a payment perspective, you can actually think of it as one currency and then exchanging it for another currency. So from the FX part of it, that's actually one of the big use case that we have, because on our platform itself, we do have multiple currencies, not just US dollars, but also like euros, pounds, and we're allowing our clients to very easily exchange between those currencies.
Got it. Paul, you alluded to it a little bit before, but you were building a blockchain specifically for institutions, but it's a little bit different to a traditional blockchain, if I understand it correctly. Can you kind of give us an overview and sort of explain why it is a little bit different?
No, thank you. I was going to say, what we saw was the potential of blockchain in terms of peer-to-peer settlement in hours, if not minutes. And there's a couple of other things that people miss when you're looking at blockchains, is that the key is that you've got a distributed ledger that everyone has the same copy of the ledger. So it's not just about that for transactional purposes, it's actually synchronizing the ledgers. So there's actually use cases in fund management or private investments where you want to synchronize the investment versus the distributor versus the administrator. So there's opportunities like that. But the problem is that when you're dealing with consensus or independent validators, you can hit capacity limitations. And if you shard it, you're actually breaking it up. So you're making it a little bit more complicated. But if we were able to bring the controls to the edge so that we could synchronize on the transaction data alone, so we actually truly are real time, we don't have the cost, risk, and liability of those validators. So that makes us linearly scalable. We also, as I just said before, actually have double entry accounting and reconcilable transaction periods. So we can do the forward payables and receivables, which is 60, 70, 80% of your balance sheets. So that's a key distinction, that we're actually geared towards capital markets. I'd build on what we just said. If you think of what's required, is the other thing that a blockchain is an asset-agnostic ledger. Every time you transact in a different product, whether it's a dollar, a government bond, an equity, or other security, you're dealing with a different infrastructure. The banks and brokers, for want of a blockchain expression, are like the layer twos that talk to all the infrastructures. But a blockchain can hold every asset. So now, and to Wee's point, is that you're saying I can have a dollar and it's accessible in Asia. And the Asian banks and brokers and fund managers have US government securities for investment purposes, but they can't repo them. Now, hands up, who knows what a repo is?
Let's take a pause to shout out one of our favorite partners. For tech innovators facing legal challenges, Zuba Lawler is your go-to law firm. They focus on understanding your technology and business model before addressing legal requirements. Specializing in blockchain, AI, VR, AR, quantum computing, and more, Zuba Lawler offers expert guidance in capital raising, IP transactions, M&A, litigation, and compliance. Visit zuberlawler.com, that's ZUBERLAWLER.com, for cutting-edge legal solutions.
Okay, repo is a repurchase agreement. I need to borrow money. The cheapest way to borrow is if I can post a government security as collateral. Or if I've got excess money, I want to lend it, but the best way to lend it is to have the government bond as securities collateral. So that's what the big banks and brokers do. It's called a repo because I'm giving you the bond today to get the money, but I'm going to buy it back tomorrow for the same amount plus interest. Now, the Asian banks can't do that except in the US time zone. With this continuous asset-agnostic ledger, they can do it intraday in their own time zone. Now, I'll add a caveat to that when I've posted collateral, that's a transfer, but there's an obligation to return it. That's the payable receivable. I've borrowed money, that's a transfer, but there's an obligation to pay it back. That's a payable receivable. So if you can't do payables and receivables, you can't actually process a repo. But the potential is this interregional transactions and being able to transact securities and assets in any time zone. Now that runs into a problem because now you're pan-jurisdictional. And who has access to the network? So those are the problems that the regulators and we're trying to work on. But we're trying to provide a solution that gives the flexibility and the capability. But we've still got to work hard with the banks and the regulators.
There's no validators and nodes, though, if I'm correct in saying that, which makes it different than other blockchains, and also brings into question sort of the trust aspect.
Blockchains work on the basis that you share your transaction to a virtual middle, and either through consensus or validators, what's deemed to be correct is then shared back. We actually have those controls at the edge, so we prevent the double spend at the front door, rather than letting it be decided by an independent validator.
What would it take for Wall Street to implement something like this? I mean, how long would it
pay us? No, we're actually in active discussions with a global bank. We would love to be talking to JP Morgan, but we're not right yet. And
shameless plug.
One of their use cases is, it's not them, it's someone else, but like inter-entity transfers. These global banks have, entities around the world, and they all interact because they've got a client in one region dealing with the unit in the other region. And so that process of interaction, again, that's multiple entities trying to synchronize their ledgers and transact seamlessly intraday. That's one of the use cases we're looking at.
Wiki, go ahead.
Yeah, just a point, right? Just to add a thought here, right? Another use case that's already being live is like the DTCC is, clearing securities on a blockchain. I think the volume is increasing. They kind of like introduce it as kind of like an experiment and as a backup. I think it's growing.
JP Morgan's Connexus is a private blockchain, right? I'm really interested in this kind of expansion potentially for institutions going beyond private blockchains sometime in the future. We talk about walled gardens and, the benefits of transacting on a public blockchain as well. Someone made a fascinating comparison on a panel I was on the other day about how back in the day, most institutions were really uncomfortable with putting their data on public clouds. And now everybody puts their data on public clouds like AWS and Azure. Do you see something similar happening with blockchain down the line where, maybe institutions will get more comfortable and switch over to public blockchains, and then what's sort of the give and take for institutions, like benefits and costs,
Definitely. I mean, if you asked me this question a year ago, my answer will probably be a little different. But now that you're asking me today, I would say definitely yes. We see immense value in public blockchains. Now, you think about what is the value of blockchains. It's really the idea that you can have multiple different parties recording different information on a common platform. So in the case of like from a financial services perspective, that means us providing like cash value on chain. You could have some other companies issuing securities on chain. You could have different parties building different applications on chain. Now, the value is really this idea of an open network where we are all able to very seamlessly interact with each other. Now, so if we say that the value of blockchain is really in that network effect, then we need an open blockchain, so open network. So what is more open than a public blockchain? From that perspective, I would say, yes, we see a lot of value in using public blockchain. But having said that, we do see certain, I would say concerns today with public blockchains or certain set of like trade-offs. So there are certain areas that we still kind of face challenges around. For example, governance. Now, if you talk about a public blockchain, the idea of decentralized governance from an individual institution perspective where we are very used to signing agreements with a single entity, this idea of a decentralized governance is actually challenging for us. So that's one area. The other one is scalability, technology scalability, and then privacy. I would say that from a technology perspective, scalability is being solved today. So none of us really talk about like scalability challenges with blockchains today, because we know that if there's a need to, our tools are very easily able to solve most of our transaction needs. Of course, if you're talking about like hundreds of thousands of transactions per second, then maybe that's still a challenge. But at least for us, when we are looking at wholesale transactions, we don't see an issue with scalability. The biggest technology challenge is really from a privacy perspective. If I were to transact on a public blockchain, now we are not going to put PII on chain. So that's safe, but at the same time, there's usually certain leakage of information. Like you will still see that there's a transfer from one wallet address to another. If you're going to see a transfer of like $300 million from one address to another, it's fairly easy to know that something big is happening in the market. So some of these considerations I think would need to be solved, but I do feel that there's going to be some bifurcation where we're going to say, hey, some of these use cases, we're going to prioritize that whole integration, network effects over privacy, and we're going to say, for these transactions, public networks is the best place to doing that. And then for other transactions where privacy is paramount, we're going to say, hey, we're going to transact on a private permission network. So that's how I see things are going to move. And from our perspective, when we are looking at public blockchains, we have actually issued our own deposit tokens. So we did it on a POC, a live POC, couple of months back. So we do have $1 million of JPMD deposit tokens that's been issued on a public blockchain.
I feel like we've got to talk about policy because that is such an important part of what's going on here. And frankly, it's going to dictate how far this industry goes in this country. And we are in DC, and a lot of this discussion is going on Capitol Hill as we speak. So I'm curious, Marcus, how are you advising clients and, people that you talk to on a daily basis, like how to prepare and really sort of like figure out what's ahead, whether market structure passes this year or next year, kind of basically how to prepare, and any advice that you're giving them for what's ahead.
Thank you. So, we've been helping clients with licensing questions and regulations for a long time, right? Now that we have the Genius Act, a lot of clients and companies are saying, how do we implement it? How do we comply with the requirements of the act? And, having longstanding experience with stablecoin issuers, right? I personally know, right, you have to be careful how you invest in what kind of assets reserve assets you invest. Right now, you have the guidance that tells you what you can invest into, what's your restriction and limitation, right? So we can help clients to make sure they're compliant with the requirements of the act. And as we move towards the Clarity Act, hopefully that gets some traction soon and gets approved. Because that's going to be the key thing this year everybody's waiting for, right? If you just think back the last years under Gary Gensler, and you're a securities exchange and you're a security exchange, right? Everybody got a Wells notice, everybody got sued, nobody knew what they were doing. The big companies stayed out, right? You were a bank, all the banking regulators kind of like said, oh, you can't do crypto, you can't do this. Now we're seeing, the ice age is melting. Banks are now permitted to do it. We talked earlier about the quote from Jamie Dimon, which is great to hear. So once the Clarity Act gets finalized, right, people will know, and companies and business will know, am I dealing with the security? Am I dealing with a commodity? Who's my regulator, right? And then we're telling clients to prepare for is make sure your governance, your board is aware, is educated, is trained, because like a big part is training. When we speak to companies that are non-native crypto companies that are looking to adopt crypto, right, either as a crypto treasury or accepting crypto for payments or stablecoin, many of the people, management and governance, don't know much about crypto. And so my advice is always make sure you educate yourself, you do training, you qualify the people. And if you're like a large public institution, where you have also, you're regulated, right? You have internal audits, and overnight your internal audit team is suddenly charged with coming up with risk assessment, risk plans, audit plans. We've had that. We've been called to meetings with like large global institutions that said, oh, we're now getting into crypto. Our compliance team and our internal audit team don't really know how to handle it. Can you help us, right? So we're helping with the controls infrastructure, but also with preparing governance and management to comply with the expected guidelines.
Wiki, you've been dealing with the SEC for a long time, at least JP Morgan has, as a publicly traded reporting company. How have those conversations been going for you guys over the last, 8 to 9 months? You met with the SEC crypto task force. I imagine those, to be a fly on the wall in those rooms, right? Probably a lot different.
So I started by, with the earlier question, I started by saying, if you were asking me this question a year ago, I wouldn't say public blockchains. Now, I would say that attitudes have changed a lot over the past year with the new administration. So my perspective, so I'm more on the banking side. So the regulators I deal with are more of like the OCC, the Federal Reserve, and the FDIC. But I would say that attitudes are really very similar across the three, as well as like SEC and CFTC. Everyone is just a lot more open today. Now, if you think about just a year ago, if I were to do anything on public blockchain, there's this 4 numbers that the banks hate to hear, which is 1179. anytime you talk about public blockchain, anything to do with even distributed ledger technology, there was always this OCC 1179 process where we have to go through to get a no objection letter to be able to do anything in this particular area. It meant that actually from an innovation perspective, it's challenging to do. And I do feel that one of the by-effect of that is that innovation in the space of blockchain among the banks and the large financial institutions have very much been really only within the top tier of financial institutions, because the cost of doing all of this work from just that compliance perspective, we always joke that when we build a product, we build it like at least twice. Once is really just for compliance. So yeah. So that has changed significantly over the past year. So this year when we have conversations, they are always a lot more open, and actually the whole attitude has changed from the top right down to the working level people, because when we are having conversations, I mean, previously it was always around getting approvals, but now it's actually people wanting to learn, wanting to understand what we are doing. We'll be talking about a new product, and they'll be asking questions around like, this particular component, what is it doing? How are you actually building it? And it's actually really nice. I mean, we spend a bit more time, but we're happy doing it because we would want to help the regulators really understand what we are doing, how we are doing things in a way that is still safe, that we are managing risk well, because that makes it a lot easier for us to launch products. And I would just say that generally, attitude this year has been so much more positive, and that whole positivity, it is actually just creating a lot of interest within the general industry to hey, this is the right time to really take things forward.
And Paul, do you think regulation is going to help or hinder the product that you're trying to build?
It's a leading question. No, I would say, first of all, on the public blockchain thing, I'd suggest no, you don't record things to public blockchains. There's a good reason. You're not really using them as a network. You're using them as a clearinghouse just to put your slither of data on a full node of Ethereum. So someone is paying for that full node of Ethereum just so you can confirm your data. Therefore, you're dealing with something that could be potentially unstable. And in terms of, are you allowed to put your fiduciary clients' records, on a public blockchain? At one of the GBA events, we had Rick Edelman here, and you can't advise people to buy crypto. It's not an authorized product. So there's a lot of tangential things. Having said that, the crypto DeFi world is going way beyond what we've got regulated now, all because they're pan-regional and they're showing the innovation forward. And then, like I said, even the current enterprise blockchains, there's a risk that we're going to go beyond the current regulations with the pan-jurisdictional problems or challenges. So I think the regulators really have to think about how they look at these assets, how they control them. And just to come back to where we were with our design, is I'm an operations infrastructure guy from strategy and innovation. So every time we had a new product, the best thing I could do is prove that it was actually meeting the current regulations, because then we just need an internal legal counsel to say that. And with our accounting and what we're doing is we're actually just producing a financial ledger, and the only difference is it's on a distributed network. Therefore, it's within the boundaries of the current regulations. So I encourage the regulators to be cautious and thoughtful, but they've got some big challenges that I'm happy to participate in, but we don't know what the answer is quite yet.
Thank you so much, guys.
We've reached the outer limit at the edge of show for today. Thanks for exploring with us. We have room for more adventurers on our starship, so invite your friends and cool strangers to join our journey. If you're among the hundreds of thousands following us on Spotify, iTunes, iHeartRadio, or watching us on Myco or YouTube, please hit that subscribe button, rate us, and make an awesome comment too. And don't forget to pass this episode along to a friend or two who would benefit from it. Doubling back to again, recommend checking out myco.io, where you can watch The Edge of Show and earn for your time and attention. That's myco.io. Don't forget to visit theedgeofshow.com. The is part of the domain name, where you can learn more about collaborating with us and also subscribe to the Edge of Weekly newsletter for the latest Web3 news, events, and show drops. In addition, connect with us on all major social platforms by searching for The Edge of Show. Join the exciting conversations happening online. Lastly, be sure to tune in next time for more great Web3 and AI content. Until then, keep pushing the boundaries. Thanks again for hanging out with us today. The views and opinions expressed on The Edge of Show reflect solely those views and opinions of the show host and its guests. Please make sure to do your own research. Our show is not financial advice. You understand that you are using any and all information on or through this podcast at your own risk. Whenever making financial decisions, we recommend doing your own research and talking to your accountant for financial advice. From time to time, we may feature sponsored content on the show for which we receive value, and we may share links for which we receive a commission if you make a purchase through one of these links. Refer to our website, www.edgeofnft.com, for our full disclaimer, terms and conditions, and privacy policy.